How's it, traders? Welcome back to Paradigm Flip. Hope you're all doing well. If you're watching this video right now, you're very fortunate because in this video, I'm going to share one of my favorite trading setups. It is one of the best and most profitable trading setups in my arsenal, and I believe every retail trader should know this trading setup. And I also strongly believe that if you just master and practice this one trading setup, you will find consistency within the market just using this setup alone. Right, so without wasting any time, let's get straight into the video.
Pull the trigger.
So the setup that we are going to be looking at is basically a trend continuation setup, and it's worthwhile noting that, right? Now, setups could be based into two types of trading strategies, right? And one of them is trend continuation. The second would be a mean reversion setup, right? And the one that we are looking at today is a trend continuation setup. And therefore, it's quite obvious that the market environment that we need to filter out and actually look for when we are looking for these setups is more so a trend, okay, or a momentum based environment. Now, the setup that we are looking at is simply this area over here, right? Now, you'll notice this is a pullback, but it is a unique pullback. Now, you may think, yeah, I know what he's talking about. He's talking about a flag, right? And yes, indeed, it is a flag, right? But that's not what's important about this setup, right? Just stay with me for a bit here and you'll soon learn, right, what makes this trade setup so good, right, and why it works so well. Okay, now you'll notice that it is very different from these pullbacks, right? This pullback right here. And you'll notice this is basically a sharp move lower and a move higher. Okay, now one thing you'll identify, right, now that you've noticed that this is the setup that I'm talking about, and we're going to break it down and we can actually look at the actual setup, right, just in case you don't actually see what I'm talking about, right? These are very frequent, which is a good thing. Okay, so within a day you can actually find multiple setups like this, right? And we'll just go through this simple day here, right, as we're going through this video, and we'll actually take a look at where they all occur. And it's also not time frame dependent, which means you can find it on any time frame, right? You can scalp it or you can swing trade it whenever it occurs on a higher time frame. Okay, now what we are actually looking at here, right, is we have a trend, an established trend, right, quite obvious. And you'll notice that we have an impulse leg, right, a very sharp impulse going higher, right? That's the first thing that we see here, right? And we then have a move down. Okay, and after we have this move down, right, we have a little pullback of that down move, right? So we see this move down, we have this move up, right, and we have another leg down. Okay, so what we have is basically what Elliott Wave would call a simple ABC pattern. Okay, and that's basically what we are looking at, right? And what's so important about this pattern is that on the third leg down, we actually grab liquidity. Now, at this point, the pattern is not yet complete, right? It's not yet ready to be traded. Now, what you'll find is a lot of traders will end up taking this pattern or this setup, right, on a breakout, right? They'll look for a breakout, right? That's generally how flag patterns are played, okay, which is fair and fine, right? Now, that's still a good entry, right? If you manage to take the breakout before we actually take out the previous high, right? Then I would encourage you to actually go for that trade, okay? However, right, where you actually want to be getting in is when we reject the previous low, right? So if I just make that a bit thinner so we can see it very clearly, right? Once we have this rejection of the previous low, right, and we come back within the range, right, at this point, okay, at that point, that's where we want to be taking the trade, okay, and if we get this pullback, what we want to see is that we are trading by just get my purple color back again, right? If I get this correct here. Now, what we actually want to be seeing is we want to be seeing this occurring as we are pulling back into a zone, right? Into an area where we anticipate buying to occur already, right? And obviously that's going to increase the probability or the odds of this trade setup working out. Now, once we get this rejection, right, you can either enter aggressively or you can either wait for a consolidation, right, within this area, okay, which you, by the way, you might not get, right, or you can enter aggressively as soon as we enter into this area. And generally, you want to be keeping your stop loss just below the low that was formed, right? So if I just draw this in red, right, you want to be keeping your stop loss below this low. Now, if you want to be a bit conservative, you can actually keep your stop loss a bit lower than that, right? And just anticipate a possibility of price running the low at least one more time, right? Because that could happen, right? And you don't want to be caught up and be taken out in that process, right? So I would suggest just keeping your stop loss just a little bit off of that low, right? If you're very conservative. If you want to be aggressive, right, you'd keep your stop loss tight just below that low. Now, when you are doing your back testing, right, you'll see what works for you, okay? Right, but more often than not, if you keep your stop loss below the low, you'll be fine, right? And once we get this rejection, right, you enter, you keep your stop below the low, right? And obviously your first target, right, would be this previous high, right? Your second target would be a zero point 0.5 fib extension, and your final and main target would be a one-to-one of this balance area. So whatever this balance area is, right, whatever the range of this balance area is, right, you're going to project that up, right, going out, and that's going to be your one-to-one, and that's going to be your final target, right? Now it's up to you in your backtesting, you'll see what works for you, right? But more often than not, right, we always manage to get this zero point 0.5 extension right over here. Okay, so this is basically the pattern, right, or the trade setup, and it's just a simple ABC. Now, if you actually go and look for this pattern and go and study it and backtest it, right, and only wait for these setups to occur within the market, right, you'll see a change, right? You will find your consistency, right, if you do manage to master these kind of setups, right? They are very straightforward, they are very simple, they are frequent, and they are very high probability setups. Now we can just simply take a look at how often these setups occurred within this piece of price action within this day, right, on this time frame, on this 5 minute time frame that we are looking at, right? And you'll notice this was the one that we are looking at, and we'll just come back and look at it again, right? But what you'll notice is that we have one right here as well, right? You'll notice that we have this sharp impulse down, right? Here is a resistance level, right? So we're clearly in a downtrend, right? We pull back and we impulse lower, okay? And you can see price pulls back into this sell zone, right? So we have a sell zone here. Price pulls back into that resistance, and you can see how it pulls back into it, right? If I just get a green color, so we can see this very clearly, right? And make this very small, right? After the impulse down, we get our A, we get our B, right? At this point, we are anticipating or waiting for price to take the liquidity or run the stops of these guys because these are the early sellers, right? So price runs the stops of those guys and we get that rejection, right? And that's your ABC, right? And from this point, you can either aggressively enter, right, and keep your stop above the previous high, right? Or you can wait for a consolidation. You can see in this area here, we got a consolidation, right? And you can basically enter in on that consolidation, also keeping your stop above the previous high, right? And where you want to target, right, if I just draw my fib over this area, right? Your targets, your first target is going to be this area here, right? So on a lower time frame, right? Once you take out this low, that's your first target. The 0.5 extension, right? That's your second target, and a one-to-one extension, right? That is your final target, right? So obviously this 0.5 extension, right, will be a one-to-one of this balance area, right? And this one-to-one measured move, right, will be a measured move of the entire impulse and pullback, right? Or you can simply draw up your fibs over the balance area itself, right? And you can use these target areas, right? These are more conservative target areas. And this is where you'd get a one-to-one of this balance area, right? Coming into this area here. Okay, and that's more conservative, right? And obviously, the more conservative you are, the higher probability you'll be at reaching your target in this instance, right? But however, if price continues to drop, you'll fail to catch a lot of the moves, right? So you might leave a lot of uh, the trade on the table, okay? But that's obviously a decision that you're gonna have to make, okay? That's a very subjective decision that you're gonna have to make, right? So that's one of the setups that occurred there, right? Another setup that occurred was in this area here, right? We got a little move down, right? We got a move up here, right? And we got an ABC there, right? We got a liquidity grab at that point and we rejected the high, right? And you can see this would be where your entry is, right? That's where your stop would be, right? And obviously your targets accordingly, right? You can see if you had to go on a lower time frame, right, within this area here, right? This is another one of those setups, right? And you can see that we have this move down, right? You can see we have a move up here, right? And that's the highest area there. We have another move down here, right? And we have a move up here, right? And you can see we took out that high, right? And we got that rejection. Your entry would be there. Obviously, your stop would be at the high, right? And you'd be taking your targets accordingly. Now, what we can actually do is just look at that area on a lower time frame. Okay, so we can actually just look at that from a lower time frame view. So what I'll actually do is I'll just mark this up, and when we're done going through this time frame, we can go on a lower time frame and have a look at what's happening in there. Okay, now the next area that we see a setup is this area right here. Okay, and you can see we had this strong impulsive move up, right? We had our A, we had our B, we had our C, right? Price basically takes out the liquidity of this area. You can see we get that rejection of the low, okay? We come back inside the range, right? And your entry would be somewhere within this location and your stop loss would be below the low. So very tight stop, right? And it's very easy for you to get a very good risk reward. I mean, if you taking these entries in this area here, right, and your stop loss is below the previous low, right, it's very easy for you to get a 1 to 2 or a 1 to 3, right, just by targeting the previous high, right, and you can get a 1 to 4 and above, right, if your target is beyond that, right? So very high probability trades, right? Very low risk and high reward kind of trades, right? And just go and practice these and have a look at the win rate, right? And see if they work well for you. If they don't work well for you, leave it. But I guarantee you, right, you won't be disappointed when you actually go and backtest these, right? Don't try and trade these live before you backtest them. Go and do your due diligence and don't take my word for it, right? Now, let's just have a look at this area on a lower time frame, right? So we can simply go to a 1 minute chart, right? And just have a look at that piece of price over there. Okay. right? And there we are. Okay, so you can see that we have this strong impulsive move down. We have your A, you have your B, you have your C, right? And on the C leg, price basically comes and takes out the liquidity, right? You get that strong rejection, right? So what are you doing? You are entering as soon as we reject, you are keeping your stop at the high, right? And you are taking your profit at the according targets, right? According to the fib extensions, right? That we spoke about. Okay, so this is the setup, and I hope you learned a lot from this video. And if you really liked it and it added value to your trading, please be sure to hit the like button, please subscribe, and please leave a comment on your thoughts below, right? Everything that you do goes a long way, and I thank you and appreciate you for taking your time to watch this video. And until next time, I'll catch you all on the flip side.